It's no secret that 2022 has been a terrible time for crypto. At the time of this recording, the crypto market is still down 57% on the year. And the big question everybody wants to know is, has the bottom already been hit? Well, as Ark Invest have just published their latest insights on the crypto market, we're going to take a look at the key insights and try to get an answer to that question. And so we'll be looking at three main things. Does Ark Invest think that the crypto market has already bottomed? Then I'm going to highlight one crypto which has been gaining some serious strength in this bear market and will be one to watch. And then we'll finish up with a warning, as there are two charts that show we may not be out of the woods just yet. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, how is everybody faring this crypto winter? If it is your first one, then it can be a bit of an emotional roller coaster. So, what is the latest from Ark Invest? And do they believe that the bottom is now in? And so we're looking at three charts to try to answer the question, has the market bottomed? And firstly, we have the Bitcoin 200-week moving average and the investor cost basis. And for the last few months, Bitcoin and the crypto market has been stuck in this sideways channel. And the investor cost basis has been acting as support, and the 200-week has been acting as resistance. So 200-week currently sits at 23,500, and investor cost basis currently sits at 19,000. And as I said, the last couple of months, it's kind of just been bouncing in this sideways channel, which for crypto can be very frustrating. However, if we look historically, then both of these have been excellent indicators that we've either hit or very close to a market bottom. Next chart is some on-chain analysis. We have Bitcoin's short-term and long-term holders. And the key point that Ark Invest was pointing out recently is that the short-term holders have recently crossed over the long-term holders. And what this is saying is that it looks like the short-term holders have now capitulated. And again, we only have, say, 10 years worth of data, but historically, this is also saying that we've either hit or very close to a market bottom. And third and final is Bitcoin's quarterly NRPL, or net realized profit or loss. Net being the bottom line, realized being actually sold and not just on paper, and whether it's in profit or loss. And what this chart is saying is that this current crash that has happened is now historically very close to what's happened in previous cycles in terms of severity and also duration. So I would say all three charts are pretty much saying the same thing, that it's indicating that we are very close or have already hit the market bottom. Now, next up is one crypto to watch for the next bull market cycle. Now, Ark Invest had pointed out that when you look at Ethereum priced in Bitcoin, we did have this big run up to the merge, but the merge turned out to be a sell the news event. And then Ethereum has been losing ground against Bitcoin. But one thing that's pretty noteworthy this year has to do with Binance's BNB chain. And this is the same thing, BNB priced in Bitcoin. And you can see from 2021, just look at the strength gaining from Binance's BNB. So unlike Ethereum, this is making serious grounds against the market leader. And then another great thing to look at when assessing blockchains is how many people are actually using the blockchain, as it cuts through all the noise and speculation. Which ones are actually being used? So let me quickly show you the number of users. And firstly, this is the number of active users for Ethereum. And so over the last 90 days, number of active users for Ethereum is about 400,000. And if we look at Binance Smart Chain, over the same period, number of active users is double, 800,000. So twice as many people are using the Binance Smart Chain. So for me, BNB is definitely going to be one to watch for the next bull market cycle. And the last couple of points to cover for this month, the first has to do with the yield curve and the yield curve inversion. So just to quickly explain why a yield curve inversion is such a bad thing, and it has to do with the bond market. So with bonds, you're essentially lending your money to the government. And you can do this for a few months. You could do it for 2 years, 5 years, 10 years, 20 years. And in a healthy, functioning market, let's just use the 2 and 10 year example. If you are going to loan your money to the government for 10 years, you're going to want a higher yield than if you were lending for 2 years. Or else, why would you even bother locking your money up for 10 years? So in a healthy market, you should get a higher rate for loaning your money for a longer duration. However, when the economy breaks, we get this yield curve inversion. And that just simply means that all of a sudden you can get a better rate for loaning for 2 years versus 10 years. So this doesn't make sense. And it signals that the economy is broken. And whenever this happens, when it inverts, it's nearly been 100% accurate that the economy will be going into recession. And this is where we're at right now. Yield curve is now seriously starting to invert. It's signaling a broken economy and will be going deeper into recession. And the other big warning sign happening right now, which you may have seen, has to do with the investment banks. And the big one hitting the headlines right now is Credit Suisse. And this chart is just pointing out the number of credit default swaps, which is now higher than it was in the great financial crisis 08-09. And what people like Michael Burry are trying to point out is that you'll get a true market bottom when we get these big banking failures, like what happened with Lehman Brothers. And as of yet, this hasn't happened, and so would indicate that the worst is still yet to come. So any dollar cost averaging you can do close to the 200-week moving average or investor cost basis, history says would be an excellent time to accumulate. When the short-term holders cross the long-term holders, then history says that this has been very close to the market bottom. They say that great companies are built during bear markets, and Binance's BNB has been gaining serious strength against Bitcoin. And a great thing to look at is how many people are actually using the blockchain. And it currently has twice as many users as Ethereum. So I think it's going to be one to watch for the next bull market cycle, despite the recent pause. But let's not be blind to the fact that the Fed is still aggressively raising interest rates and a recession will take time to play out. So there you are, guys. Hope you enjoyed. Now, for me, it's still a 50-50 split. I see amazing developments going on in crypto, but we have a terrible global economy. But let me know your thoughts below. And now we're just going to finish on one final thought. So far, there's been a very consistent 4-year cycle. One excellent year, followed by a big down year, followed by 2 great years. And it does make you think, could it literally be that simple?